He believed in doing whatever worked. And in a depression, in a liquidity trap, when people were hoarding money, hoarding gold, not spending it, he said, well, if people won't spend, the government can and get the economy moving. But then he was the first one to say, yeah, once you get there, pay it back and you'll let the economy run on its own. Same idea. So the classic case, end of World War II, the U.S. debt to GDP ratio. By the way, Constantine, people say we have a big debt. You know, if you throw out, 25 trillion, 31 trillion, these are
no one understands this.
Well, they don't, but I don't care. And here's what I mean by that. The number doesn't mean anything. What you have to calculate is the debt to GDP ratio. What is your payment ability? So I say if I owe $50,000 on a MasterCard and I'm making $20,000 a year, I'm probably going broke. If I owe $50,000 and I'm making $500,000 a year, I can write a check. So in other words, the debt can only be considered dangerous or not in relation to the income. So you want to look at the debt to GDP ratio. In 1945, the U.S. debt to GDP ratio was 120%, all-time high.
What does that mean, Jim?
Well, it means that it's extremely high and you have to pay it off. But my point is, we won the war, and we were a global hegemon. I remember being in elementary school. Like, U.S. produces half the cars, 3/4 of the cars in the world, half the iron. Like, hey, we got the whole thing. We won the war. But then what happened next was even more interesting. Between 1945 and 1980, that debt to GDP ratio went down from 120% to 30%, which is completely manageable. And it was bipartisan. You had Democrats like Harry Truman, JFK, and Lyndon Johnson, Jimmy Carter, Republicans like Eisenhower, Nixon, and Ford. It was not a partisan issue. Everybody thought it was a good idea. And then, so along comes Reagan. He's handed a debt to GDP ratio of 30%. Now, Reagan has this reputation as, the tight, tough fist, tight-fisted conservative. No, he ran it back up again to 50%. But we won the Cold War. We won another war. In 1989, the Berlin Wall comes down. 1991, the dissolution of the Soviet Union. I know that was George H.W. Bush, but Reagan laid the groundwork with Star Wars and a lot else. So it's okay, ran it up again, but we won the Cold War, which I never thought would end. I thought next 50 years be talking about the Cold War. So, but then you're supposed to take it down again, and that didn't happen under George H.W. Bush and Bill Clinton. They didn't run it up, but they didn't take it down. It stayed around 50, 60%. And even under George W. Bush with Iraq and everything else, it didn't go much above that. But where it exploded was Obama and Trump and Biden. So Obama was handed about 105% between Obama and Trump. They took it up to 131%, which is where it is now, and Biden as well. So they broke the mold, that 220-year mold I just described. There were no existential wars. Yeah, we're in a kind of a long drawn-out thing in Afghanistan, but it wasn't nearly as costly as the other things we're talking about. The U.S. didn't win anything, by the way. But they ran it up to 130%. Now, that's, first of all, the highest of all time. Secondly, it broke the rule that you should pay it down in times of peace. Third, where's your dry powder if you actually did have a big war tomorrow with China invading Taiwan? You're going to take it up to 200%. And by the way, 130%, who's at that lunch table? It's Lebanon, Greece, and Italy. I mean, is that the group you want to be having lunch with, in the cafeteria?
I mean, the food would be good.
Yeah.
The Italian food.
There'd be no one to pay
well,
for
actually,
it, though.
Greek food is pretty good, but yeah, maybe we could pay for it in lira. But that's where we are. So this is unprecedented. It's never been this high. It breaks the pattern of running it up in war and paying it down in peace. No one roots for war, but they happen. And it's worse than that because of modern monetary theory. And here's where my friend Stephanie Kelton comes in. She's a professor at State University of New York, Stony Brook campus. She's the big brain of MMT. And she was economic advisor to Bernie Sanders when he was on the Senate Budget Committee and in both of his campaigns, 2016, 2020. Again, her book, The Deficit Myth, I highly recommend it. I disagree with every word, but if you want to win the debate or you want to understand what's going on, you have to read her book. And I never put words in anyone's mouth. These are her words. She says, what's the problem? The Fed can print unlimited amounts of money, which is true. The Treasury can issue unlimited amounts of debt. Not quite true. You have to raise the debt ceiling, but it always has been raised, so that's never acted as a constraint. She says, so right from her book, she said, The only reason we have a bond market is a favor to investors, to give them a place to put their money. We don't actually need to borrow any money. All you have to do, you want to buy 10 F-35 jets, give the Fed wire instructions to Lockheed, just wire them the money. What's this business of issuing debt and having underwriters and primary dealers, and Treasury gets the money, they deposit at the Fed, and they pay Lockheed. Just cut out all the middlemen. Just have the Fed wire the money directly to Lockheed. And we don't even need a tax system. We have it because we're trying to engineer income equality, but we don't actually need taxes or bonds because we can just print the money and send it wherever we want. What's the problem? Well, when you frame it that way, you actually start out agreeing with her. I mean, I'm a lawyer. I dealt with the Fed for decades. I was once physically threatened by a Fed official. He started to come across the table at me, but that was back in the day where they were a lot tougher than they are today. It's an Irish guy, very well known. But I did what he said. But the point is, the Fed actually can print unlimited amounts of money. That is the law. The Treasury can issue all the debt at once, subject to debt ceiling increases. That's the law. And you can send the wires. So why not? So this is one of these issues where I knew that it wasn't right. I knew this was really bad advice. I knew that modern monetary theory will fail. But I didn't immediately know how to rebut those points because she's right. So I said, well, the failure must lie elsewhere. It must be not that you can't print the money or you can't send the money to Lockheed. There must be something else. And here's where I arrived at. I was trying to crack the code on Bitcoin. That took 10 years also. People say, well, Bitcoin's not backed by anything, or the dollar's not backed by anything, or the euro's not backed by anything. And I say, yes, they are. They're all backed by the same thing, which is confidence.
Right.
If I think something's money and you think it's money and I tender it to you for goods and services, and you think you're confident you can give it to Francis for goods and services, and we have a large enough group, it's money.
Right.
It can be, we were kids, we did this with baseball cards and bottle caps, so anything can be money if there's confidence. But confidence is fragile, it's easily lost, and when you lose it, it's very, very difficult to regain. And I've had this debate, I've been in vaults in the Pentagon, we're doing a tabletop financial war game, and like 10 people sitting around the table, and here's the Treasury and the CIA and the three-star general and a couple think tank people, and we're doing this. And I told the Pentagon, well, the group, but including the Treasury, this 7 or 8 years ago, because we were weaponizing the dollar against Iran. Don't get me started on Russia. Well, actually, I'll start myself on Russia. But the point is, I said, sanctions work to a point. You're weaponizing the dollar, but you're doing it too much, too frequently, and you're relying on it too much. What's going to happen is you're going to drive people away from the dollar. You're going to drive people out of the dollar system because they're not going to take it anymore. I was, there's one guy who was sitting one place away from me. There was somebody in between us. He was a very senior Treasury official, specifically tasked with managing foreign exchange relationships with Asia, Japan and China, basically. But a senior guy. His name was actually David Dollar. He takes both hands, slams them on the table, goes,